Good morning, this is Avinash. I'll have quick comments on three stocks today: Geon Corporation, Dow Chemical, and Arco Chemical. Starting with Geon. After the market closed, they reported earnings. The earnings were 21 cents, and they were in line with our recently reduced estimates. Our estimate had been 23 cents. There's a lot of sensitivity to tiny changes in margins with this company. So, 21 versus 23 is not a big deal. Estimates for the full year: 93 remain, 15 cents, and for next year the estimate is $1. The fourth quarter number, we are now, if we look for 2 cents, and that's pretty much in line with what we had before. 2 cents earnings in the fourth quarter. Last year they had a pretty big loss. This year, they should be doing much better because of the cost cutting. Now you'll recall from the IPO time that the key story in Geon had been, there were really two elements to it. One was the internal story, the cost cutting. The second was all the external stuff, margin improvement in PVC. Now just a quick update. The internal cost cutting is pretty much on track. In the first 9 months, looking at their numbers, I can identify and detect from the numbers that they report about $16 million, 1/6, that I directly attribute to their own internal cost cutting. Now in the press release they talk about $33 million that they've actually achieved themselves. So that's a ratio of 50% that I can see, relative to what they say. That's not bad compared to what all these other companies do. Union Carbide, was able to achieve 25%. They talked about $400 million in cost cuts. We were able to see $100 million. These guys always do their bean counting in a different way. So what I would say is, looking at the numbers, the internal story is on track. What about the external story? That story, as I've been telling you over the last 3 or 4 months, that story is not as robust as it was earlier in the year, and a lot of that has to do with capacity additions announced by other people. Net at $21, I think the stock is a market performer, and I mean that. It's not a euphemism. And I've said in written reports that the stock does come down in the $18 or $19 range. At that time, the risk-reward seems pretty decent. I see consensus estimates were a little bit less, about 20 cents. There might be a modest positive response to the earnings. There's a conference call at 2 o'clock in the afternoon today. Switching over to Dow Chemical and Arco, I'm tweaking numbers a little bit. These are not big deals. I'm not changing 1994 numbers, and so I'm not going to talk too much about these. For 1993, third quarter, I'm raising estimates by 6 cents to 56 cents. For the full year, by 10 cents. The new number is $2.30. For 1994, the numbers are unchanged at $3.05, and all of this is for Dow Chemical. The story here is they laid off a lot of people in the second quarter. All of that is showing up in the third quarter in the form of cost cuts. Next year, you'll get the full benefit from this and from any economic recovery that you may have. Offsetting that will be uncertainty with Marion Merrill Dow. Today, the company is having a meeting at 8:30 to talk about their purchase of Rugby Pharmaceuticals, which is a generic drug manufacturer. We'll have some more comments on that as the day progresses. And finally, Arco Chemical. The opposite of Dow, I'm trimming numbers a little by 4 cents to 45 cents for the third quarter, and by 10 cents for the full year, down to $1.85. And the sob story over here has to do with MTBE margins. That's a fuel. It goes into gasoline to raise octane and to reduce carbon monoxide. Basically, there's plenty of capacity available. Margins are seasonally increasing, but not by the kind of level that we would have thought for. Not a big deal. Any questions on these?
Do you have a stock target for Dow?
Stock target for Dow. In the near term, I had been saying that the stock would trade in the low 50s at the bottom end and low 60s at the top end. The stock is about $59 right now. My sense is near term, with the earnings momentum, reasonable, third quarter and fourth quarter will look pretty decent. The stock has a pretty decent chance of getting back into the low 60s. Now at that stage, with $3 in estimates for next year, $60 stock, uncertainty over Marion Merrill Dow, my feeling is that in the low to mid 60s, I think the stock stalls out. The longer term story is fine. The dividend yield is 4.4%. It's secure. Cash flow multiples are fine. And one can always bet on 1997, 1998 commodity margins going up. I really don't see the stock going down a whole lot. I just see it, sort of in a trading range near term.
Avi, from the Geon results, can you draw any further implications for Georgia Gulf reporting next week?
Good question. My sense is that, the consensus estimates are 28 cents. My estimate is 26 cents. My sense is that consensus will be modestly disappointed. I've said in the past that caustic soda is a problem area for this company. They were recovering caustic soda declines through chlorine price increases. You'll recall that those two products are made together, and chlorine prices are topping out. So near term, you've got a few quarters in which everything is going wrong. Georgia Gulf has a fantastic story developing for 1995. I see near term possibly, some more continued pressure on the stock. But for someone who's a longer term investor, I think the stock's valuation is not bad at all. This sort of falls in the category of the gang of $18 and below. The stocks that make sense are Geon, Georgia Gulf, Carbide, Lyondale, Ethel, etc. I mean, Georgia Gulf's valuation is not bad, but near term, yes, the earnings could come in a little weaker than consensus expectations.
Good morning. This is Richard Simon. The announced acquisition of TCI by Bell Atlantic brings what we refer to as Communicopia to Main Street. This watershed announcement benefited the stock prices of numerous Communicopia companies. Within the entertainment group, Disney advanced 4 3/4, Time Warner 1 7/8, News Corp 1 1/2, and Blockbuster declined about 5/8 of a point. The sheer size, associated publicity, as well as the legitimate impact this acquisition has on the industry participants could result in investor excitement taking on a life of its own. The immediate validation of this excitement would be associated with additional mergers and/or alliance activity. The fundamental impact on the above companies, either positive or negative, is still years away. I continue to believe that Time Warner and News Corp are direct beneficiaries of Communicopia in both content and delivery, and that their managements are exploiting all avenues of growth. Disney, however, is more narrowly focused, which might not be that bad, but it's more narrowly focused on copyright exploitation and development, and has publicly expressed its disinterest in Time Warner, News Corp, Paramount, TCI, etc. types of transactions. That, combined with problems at Euro Disney and with attendance pressure at U.S. theme parks, leads us to be more uncomfortable with its price action yesterday than others, despite the long-term fundamental payoff from the evolution of Communicopia. Over the past year, Blockbuster's stock price has moved inversely with the perceived speed of the evolution of Communicopia. Yesterday's announcements broadened, if not accelerated, the evolution or revolution of this concept. We, however, continue to believe that the home video industry, video cassettes, will not noticeably be affected by pay-per-view cable systems for many years. We continue to recommend the purchase of Time Warner and News Corp and the Walt Disney Company, the latter with the continued concerns over near-term fundamental pressures, and continue to rate Blockbuster a moderate outperformer. Just to reiterate, we will have a conference call today at 11 a.m. New York time with Robert Morris, Barry Kaplan, and myself to discuss the implications of the TCI acquisition on our industries and groups. And the 800 number is 950-1447. That's 950-1447 at 11 a.m. New York time. Thank you.
Could you review your valuation of Time Warner?
Could I do that over the phone?
Could you just briefly review the multiples that it's trading at the moment?
It's trading at about 10.5 or 11 times cash flow, but it requires a detailed explanation because cash flows have to do with the equity structure of the U.S. West deal, so it's not really that clean. Time Warner has evolved to being a company that can't be evaluated either on a multiple of cash flow or on a multiple of earnings.